welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shel Bhatnagar, and this is the Diwali special edition which you're watching, and wherein we will be inviting the top market master to really help you understand the way forward into the new Samvat. We will be getting someone who you have listened to throughout the year, talk about some of the star stock ideas, which we will reiterate on the show as well. And the motto that he is going to be joining in on the show with on special Diwali is that let the festival of lights guide you to the right investments. So without wasting much time, let us welcome Mr. Mayuresh Joshi joining in from William O'Neill India. He's the head of equity research. Warm welcome to you, Mayuresh, and thank you so much for taking the time out. Here's wishing you a fabulous Diwali, to you, to your family members, your loved ones, and everyone at William O'Neill India right here. We thank you for being with us in the previous Samvat, guiding all our viewers all year round, and we hope we will be seeing you more often with more bright ideas in the new Samvat as well.
Thank you so much, Sakshi. Thank you so much, Chelsea. And here's wishing all the viewers of BTVI a very, very happy and a prosperous Diwali, a new year, Shubha Diwali as we call it. May this year be a year full of health, wealth, and prosperity. So I think all the best to you and all your endeavors as well.
Right. Good afternoon to you, Mayuresh, and a very warm welcome on Business Today as always. Let me just start with a bit of a recap. So when I was in school, we used to watch this serial called Star Trek. And there was Captain Kirk, who used to wear the same dress as you are wearing. So it's the Empire striking back on Business Today television. I wonder if you ever watched Star Trek, the serial. I think there is some issue on the link that we have with Mayuresh. We'll try and set that up again. But let me just recap the combinations that Mayuresh had suggested in 2080 Samvat, ek saal pehle. And let's start with Bikaji Foods.
Yes.
So the price, ladies and gentlemen, the chart will be there on Bikaji Foods. It was suggested at around 430, 440 rupees. Peaked all the way beyond 900 in the past 12 months and is now somewhere like 835. So those were one of the picks that Mayuresh had suggested last year. Another one was HAL and RailTel. Sakshi, how have they performed over the last 1 year?
Well, brilliantly. HAL turned out to be an outperformer from the Diwali picks that Mayuresh had shared with us last Diwali. So we have seen an over 108% kind of return on HAL. So, you know, the current market price is somewhere to the tune of 4197 or 4200, and the recommended price at that point when they had recommended it was only 2019. So look at the kind of returns that we have already seen. A brilliant performance. And RailTel also 68% of returns is what we have seen. Right now the stock is hovering around 414 odd levels, when at the time of Mayuresh's recommendation it was around 246 right there. So brilliant performance on both.
And Sakshi, what you're talking about is Samvat to Samvat, which basically means a 12-month performance. Both HAL and RailTel have had a huge intra-year highs as well. So what we are looking at is a point-to-point return. But if you look at from the time it was suggested by Mayuresh to what it is now, so 600 on RailTel versus 246, so that would be 350 on 250. That's a huge jump. And I remember HAL at 5600. I think Mayuresh is back. Without further ado, let's Sakshi begin the conversation for Samvat 2081.
Yes,
to you.
Absolutely. And Mayuresh, the first question coming your way is that 24% returns on the benchmark since last Samvat or last Diwali till now. What are you expecting on the Nifty and the Sensex in terms of return over the next Samvat?
We always remain optimistic. So as our founder had always said that I've never met a successful pessimist before. So I think our take is always that you should have superior returns compared to the markets. But the expectation, Sakshi, this time around is to have normalized returns over the exaggerated returns that we've seen. So even if we get 15-18% return this year, I think it's pretty good on what we've probably achieved over the last 3 years.
All right, so there you have it. Those are the kind of expectations. But let's get started on the stock picks that all of you have been really waiting for with bated breath. And not one or two, but at least 6 stock ideas is something that we will be discussing with Mayuresh on the show as his Diwali special recommendations this time around as well. Let's start off with the capital markets themselves, Mayuresh. We have seen how the markets have proven themselves and the resilience that they have displayed despite all sorts of macroeconomic uncertainties, all domestic and external challenges that we have seen thus far. If we just don't talk about the near term, like recent downturn that we have seen in 1 month of October, but all the year round from last Diwali till now, come what may, wars, elections, unpredictable results that came in, everything that could probably go wrong has gone wrong. But despite that, we have seen 26,000 on the Sensex, on the Nifty, and those kind of levels have been achieved, and not much time was taken for the markets to recoup or to recover, and they continued to perform in one-way trajectory. So the biggest beneficiaries of this also have been the capital markets related stocks, which continue to be in momentum despite the downturn that we have seen. Tell us, how are you looking at this space for over the next somewhat too?
So very, very positively, Sakshi. I think if you probably look at our last Samvat picks, a lot of the PSU themes actually worked well. So I think a lot of the railway stocks became rockets, as I always call it.
Yes.
This time we are being a little bit more grounded in terms of domestic cyclicals. Our take is that global cyclicality might actually turn things around for global markets, and therefore focusing on strong domestic stories is something that will work out for this somewhat. And therefore, capital marketplace is an absolute proxy for the entire robust domestic story that we've got. You've seen a burgeoning retail demat account base. You've seen institutional investors flushed with funds, both retail money, HNI money, ultra HNI money as well. And therefore, the base logic that becomes or comes to the fore is that demat accounts will keep on getting added over the next few quarters and few years as well. The quantum of investments that might shift to the capital markets might be significant. It's only 5% who are just investing in equities, either directly or indirectly. And that percentage as a proportion of the overall asset saving base might actually go significantly higher. And last but not the least, I think the point in terms of disposable incomes, if you go through a lot of asset manager presentations, you're expected to see over the next 5 to 10 years, as the economy grows multifold, disposable incomes are going to increase multifold as well, which will mean that capital markets as a proxy and a source of investment will keep on increasing as a percentage of the wallet share of retail households.
So what are the stocks that would make sense over the next 12 months that you would want to choose for the next 1 year in the capital market space, Mayuresh?
So, Shalsar, I think what we're probably saying as proxies to the entire play in the financialization of savings, HDFC asset management is something that we continue liking at Markets with India. Our take is that a lot of flows that are coming in the form of SIPs will continue over the next few quarters. You are expected to see a lot more action that is probably happening as a percentage mix between equity and debt. And as this percentage evolves, a large part of the overall expense ratio, which was a concerning point a few quarters back, I think that has now probably got into the price, into numbers as well. And it's a funnel concept at the end of the day. So I think as more and more flows keep on coming in through these asset management companies, HDFC AMC is something that we like in particular. I think a large part of the expenses that have been accounted over the past few years in terms of building up this franchise is already there. So I think it's going to be an incremental growth as more flows come through, specifically in terms of an absolute EBITDA and absolute bottom line growth as well. Strong institution holding and all the tailwinds that I probably said. So HDFC AMC becomes one probable candidate that can do well over the next few quarters and years. The other one obviously is a proxy to the entire stock market story itself, CDSL. One of the listed peers, obviously, as far as depositories is concerned, they've got their counterpart to NSDL as well. But a large part of the retail holding actually is concentrated with CDSL. And if retail is expected to grow in terms of sheer demat account holdings, CDSL's market share is expected to remain stable or in fact even expand going forward. obviously the different legs of the business that CDSL carries in terms of its annuity incomes expected to remain very, very stable and improve exponentially as we head into the next few quarters. And the transactional part of the income obviously depends in terms of how the market is behaving. But a large part of the market behavior, as more and more, as the percentage actually increases in terms of equity participation, I think that transactional part of the revenue should also start going up. Last but not the least, I think the entire digitalization of private companies that we are speaking about, they've just scratched the surface. So I think as they evolve in this and as deadlines come to the fore over the next few years, CDSL can be a big beneficiary. Strong balance sheet, extremely strong return ratios, and therefore our take is earnings should remain extremely strong.
Okay. Mayuresh, there is just one clarity that we require from here, from your excellent report. It mentions a buy range for stocks. Some of the stocks are thankfully trading cheaper than what the buy range was recommended for. For instance, CDSL has an ideal buy zone of 1664 to 1747. It's now at 1488. Does it mean it's better at the current price, or should one step in only when the stock goes beyond 1664?
Yeah, so I think you should ideally wait, because what we've seen is that it's probably going through a phase of consolidation. What we look at markets with India is that the technical parameters should also be covered in terms of your entry point. And therefore, I think appropriately monitoring this price level becomes important. But as soon as it starts getting some element of price strength, gets around at 600, put it on your monitors, put it on your filters, and it is an actionable as soon as it crosses that 600 one.
Okay, okay. So it becomes a buy only when the stock crosses 1664. Is that what you're trying to say?
Yes, but ideally, I think once it crosses 1600, it should gain strength. So it should automatically start coming on your actionable list and as an actionable in terms of your buys or actionable.
So, ladies and gentlemen, as all of us know that the last year has been fantastic. In a 1 year period, CDSL has actually appreciated 116%. Yeah. And the price that you see in front of you, 1488, this is a 1:1 bonus that is incorporated. So this price is actually almost 3,000 rupees on the charts. But what Mayuresh says is very interesting, that the buy becomes activated the moment it hits 1664, because that is when the lot of technical parameters will also click in. Sakshi.
Absolutely. So that's as far as these key stocks are also concerned. Now, apart from the capital markets related stocks, the other space that I wanted you to throw the light on is on the consumer sentiment as well. Where do you think that will kick in as far as the new Samvat is concerned? Do you think electronics is something that investors should be really looking at? We're already talking about, as of day yesterday on Dhanteras, Kate has predicted 60,000 crores worth of retail sales having taken place in just one day. This includes all household goods, electronics, all sorts of consumption items, including gold and silver as well. So the consumer sentiment, despite all-time high prices, you come what may, that gets kicked in when the festive season is high. Going forward over the next 1 year, should one be playing big on the consumer sentiment?
They should, and what we've probably seen as an historical precedence is as monsoons have been better, rural should start coming back very, very strongly. And therefore, I think a lot of the consumer-driven plays, whether they are discretionary or staples, should show signs of improvement as we head into the second half. Obviously, urban has lagged, but to a large extent play out. As a proxy to that, I think we've got Salzer Electronics as part of our Diwali picks. What it does switchgear as a large part of its business, which is 54 odd %. Cables and wires is 43 odd %. So I think a large part of the household consumption, when it probably comes to either refurbishments or otherwise, switchgears, wires, cables becomes a very, very integral part. What they probably delivered in terms of numbers, top line has grown exceedingly well. EBITDA margins have remained extremely stable, and the management is very, very hopeful as they will keep on improvising and have better asset turns as far as their capacities and the new capacity that is coming up is concerned. In bottom line growth as well. Very, very strong fundamentals on the balance sheet, and therefore ROE should show significant improvement. So I think we've got a proxy to be attached to Salzer.
Okay. Again, as with the rest of the market, Salzer has been a star outperformer. 1 year return on Salzer is 167%. So 3 stocks we've discussed: CDSL, HDFC, AMC, and Salzer. All three of them have fantastic track records over the last 1 year. Mayuresh, for a normal investor, one would hesitate to step into these stocks after a 120% rise over the last 1 year alone. In the last 5 years, all three of them are multi-baggers. Are you just trying to say, imply actually, that stocks that double are the ones that double again?
I think it might even triple. You never know.
Okay, that's the point I was just trying to get out of Mayuresh, that look at a stock which is already a multi-bagger once, and then probably step into it when prices are better, and just hang on to the rally that is unfolding. So, three that we have discussed. Mayuresh, just last month, the government said that it would invest 9.2 lakh crores into transmission and distribution of power over the next 7 years. Are there any hidden stocks that you feel are yet to be discovered by the market? Any picks from that space?
So I think it's better to go with known name Shelter in this space, because power as a space is going to keep on doing well. It's got a huge tailwind to it, and therefore our take is that KEC International becomes an appropriate bet onto your watch list. If you look at the construct that KEC has, apart from the T&D segment and the order book of 32 odd thousand crores, 16,000 odd crores is in the T&D segment. They've got civil works, they've got railways, they've got wires and cables, they're into water treatment, they're laying metro lines, they're into the electrification part. So any part of the urban infrastructure that is expected to get covered is being covered by KEC International. Very, very strong balance sheet. They've got strong numbers. The management is pointing out to a better second half as well. Its overseas subsidiaries, including SAE and its overseas order book, is doing exceedingly well at this juncture and is expected to do so as well. So I think expected on the capex lines that you just mentioned, sir. I think T&D integral part, but a lot of the other segments that they're probably working out with, including their overall working capital requirement as well, should probably suffice that balance sheet growth remains very, very strong and solid. So as I mentioned, I think a lot of our plays this time around in this Samvat are focused on domestic and domestic segments.
Okay, so that takes care of KEC. Again, ladies and gentlemen, this is a company that has delivered phenomenal returns over the last 10 years or so. Each year, the stock has appreciated 24%, which essentially means your money is getting doubled in 3 years and then doubled in 3 years again. So, this is the kind of research that Mayuresh does, and he hopes that this trend will continue. One more from this space, Mayuresh, the power sector. Are you looking at power producers, or is there a T&D play that could be in the reckoning?
So we already discussed KEC as a T&D play. When it comes to pure generators, I think torrent power is something that we believe can still continue doing well. Obviously, the capacities that they carry out in the balance sheet, one of the capacities is still unused. At some point of time, this capacity is going to come into play, Shelter. And as that comes into play, the incremental numbers that can come through with the 1200 megawatt capacity that they probably float is going to be huge. Secondly, I think a lot of their plants are a mix outside thermal in terms of LNG usage. Expectation of a glut in terms of LNG supplies will probably mean that LNG will be available abundantly. That's one. Secondly, India will be a power deficient country as we head into the next few quarters in terms of pure demand that is expected to peak out, specifically during summers or even during winters when heating requirements are required. But to that extent, I think as these capacities become more and more, they get utilized more and more. I think the kind of operating leverage that comes through can be significant. They are also expanding their renewables capacity, and at the same time, the franchises that they've probably taken over, the T&D losses have come off quite significantly. So I think there is expected to be overall balance sheet growth that comes through. And I think that the main kicker for this stock will be the unused capacity. As that comes into use over the next few months, next few quarters, the next few years, earnings growth can be phenomenal for torrent power. So I think this is one that we like purely based on earnings dynamics.
Okay, so there you have it, Torrent Power and KEC International, the two stocks that you could be looking at from the power perspective that continue to show momentum, growth over the last few years, multi-bagger returns, and they still hold promise over the next Samvat as well. The other space that I wanted to discuss, so we've already discussed 5 stocks right there: HDFC, AMC, CDSL from the capital markets related stocks. We've discussed KEC and Torrent Power from the power space as well, and we've discussed Salzer Electronics from the consumer sentiment. So just to recap that for our viewers, the last one that we will be discussing as Diwali pick, Mayuresh, would you be looking at the chemical space at large at all to talk about a stock from this basket? Why I talk about this has again been a space which has been largely debated, had both sides of the coins, investors and experts also divided as to whether there is a structural uptrend that one should be really looking at in this space, and how much exposure does one really give to chemicals as well. How does one really pick out a chemical stock for the portfolio for the next somewhat? There is a huge range right there. How would you really be pinpointing at one stock over there?
So I think there are three broad spaces: bulk commodity, bulk chemicals, specialty chemicals, and you've got agrochemicals. Seltzer knows me well. I think I love chemicals, and he himself is a huge expert when it comes to chemistry as a subject. But when it probably comes to specialty chemicals itself, I think what we are looking at this juncture is Privi Specialty Chemicals. I think it does a lot of work in terms of fragrances and flavors. So whatever we've got in our soaps, in our shampoos, I think the fragrances that probably come through, Privi is one of the largest suppliers in India at this juncture. And ideally, I think if you look at how their strategy has been in terms of the integrated plants that they probably possess at this juncture, they're getting far more into value-added products, which are far more margin accretive. And the plants that they're probably having are sufficiently capitalized in the sense that the integration processes that have been put forth and the end customer use in terms of their product usage, the pricing stability probably stays true. As well. So again, looking at our EPS strength, RS rating, we feel that Privi becomes a good proxy for the chemical basket. Now, obviously, there are other plays as well, but it's very difficult to accommodate a lot of Diwali picks. So,
yes.
That's well put, Mayuresh. Privi got listed somewhere in 2015 of May, and we've seen a high of 2234. The counter is now available at 1732. One interesting thought occurred to me, Mayuresh, is that these 6 stocks that you mentioned, 2 from the capital market space, CDSL, HDFC, MC, from the power space, KEC International and Torrent Power, Privi Specialty, and of course Salzer. What should be the capital allocation for each one of them if the portfolio is only of 6 shares?
So I think what we ideally suggest is an equal weightage. So outside the stocks that you're probably owning, if you're say allocating 100 rupees to these 6 stocks, I think ideally, an equal weightage should something that we carried across. But again, the take is very simple. Our take and the theme for this year's report is largely that domestics will continue doing well.
Okay, fair point. So 16% each into a portfolio of these 6 stocks. And Mayuresh, what does one do? Buy all of them at one go, or would you suggest a staggered deployment?
So I think what we've suggested is that's the ideal buy range. So I think what we ideally say is that you buy 40% or 50% when it hits the pivot at the lower end. And if it's a little bit higher, you pyramid your.
Okay, Mayuresh, so that's about the stock picks. You've also talked about, what is the overall expectation on the Nifty as well going forward from here. But I want to understand from you on the asset allocation front as well. Of course, we are looking at how equities have been consistent performers, but even this time around, we've seen gold and silver outperform. How are you really advising clients on asset allocation for the next year? Do you think tempered expectations should be there from equities, and therefore there is an even greater need for one to diversify beyond equities for the upcoming somewhat?
Absolutely, Sakshi. So I think our take is that you should normalize your expectations, as I said in my opening comments. At 15 to 18% is something that you should probably believe that markets can probably deliver this year, if the bets that you're probably taking in the sectors and stocks are correct. But at the same time, I think a multi-asset allocation is something that should be preferred as a strategy. Have some allocations done toward bonds as well, the longer dated tenures, because in a falling interest rate scenario, bonds actually start performing and doing well from a returns perspective. Gold prices through the roof. I can understand that, but I think some allocation towards gold and silver should also be taken care of. I think the best way to do is gold ETFs, hassle-free, no issues in terms of physical holding, and even the transaction costs are lower. So I think a multi-asset allocation is something that is mandated at least for this summer.
Okay. Mayuresh, the other theme that was running in the markets was that large caps would outperform mids and smalls on a broad structure. Of course, in the 6 that you have picked, HDFC AMC, let us say it is a large cap. But when you drill down into William O'Neill's software, what are the 3 or 4 basic things that you look forward for the software to throw upon, so that you get a catchment of maybe 30-40 stocks and then you narrow down to 6?
So I think we've got a lot of proprietary ratings, sir. So we've got our EPS ratings and rankings. So what it basically does is it scans everything right from top line over the past few quarters to the last 3 years. Then it drills down on the same parameter on the EBITDA and the bottom line as well. At the same time, it's also looking at qualitative parameters in terms of surveillance risks as well. How are the volumes being played out? What is the market cap of the stock under consideration? What are the relative sector stocks that are getting covered in terms of relative? And that's how we derive at that EPS rating. The very, very comprehensive trajectory that we get in terms of earnings that a stock goes through. Obviously, I think once we have filtered down through our filtered lists at William O'Neill or Markets with India, it will throw all names agnostic of market cap. So it will have a 500 crore market cap and a 5,000 crore market cap as well. But then is the actual filtering process that happens, where the research team probably comes in a far greater fashion, tries to study how the market sentiment is. We try to look through our institutional product, which is called Panry, which gives us a far more clear understanding in terms of how sectoral placements are happening and where the sectoral churn is happening. And therefore, then we start focusing on the selective sectors that might do well. And then the stocks within that in terms of relative valuations. We don't fall into classic value traps where low Ps might necessarily mean that the stocks are extremely attractively placed. A stock which is doing exceedingly well and leadership stocks for the last 60 years of what we've seen across markets that we track seemingly do well. Again, one point that I just want to mention, after every correction, when a new cycle comes in, there are new leadership sectors and stocks that come through. Always be open in terms of new data points coming through, tweaking your portfolios accordingly and taking a call in that sense. So just staying and holding for 3 years doesn't make sense. Be watchful in terms of all the data points that are evolving in markets as dynamic as they are.
Okay. Mayuresh, let's shift focus to a near-term lens now. We have discussed over 1 year what should investors be doing in terms of the index and expectations, and of course stocks as well. Do you think a bottom has been made in the recent downturn that we have been witnessing ongoing? And secondly, what could be a trigger for the markets to reverse from this downward correction that we are seeing, and of course for the FIIs to also return to India?
So 2 aspects. I think one was obviously how the presidential elections in the US are expected to pan out. I think that will probably get over the next 2 weeks. The US bond yields have started moving higher. So to that extent, I think the equity underperformance as far as the S&P is concerned, which is delivering 3.6% annualized return expectations against a bond yield of 4.26. I think that probably remains skewed. So how the US debt is expected to play out at 36 odd trillion, $1 trillion in terms of annual payouts. I think that is going to be interesting in terms of the rate cut trajectory as far as the US markets are concerned. Obviously, we've been speaking about geopolitics. You mentioned that, Sakshi. I think we've been through 3 wars in the last 3 years and still the high. Our take is that crude is going to remain in a range-bound fashion, which is very, very positive for India. Because I think it creates a lot of headroom in terms of our current account deficit actually going down. With the buoyancy in the economy and tax collections remaining high, private capex, which has come back very, very strongly in FY24 and expected to improve over the next couple of years, will basically mean that as government capex keeps on burgeoning, you've got an 11.5 lakh crore outlay from the government side. As the private side starts contributing, you're going to see manufacturing, infrastructure remain in focus. And therefore, the India growth story structurally should continue. If a fall does come through from global reasons, domestic liquidity has held strong. Whether it holds up or not is a question mark. But I think the last 3 years, the flows which have probably come through and the expectations as we've been laying out through our proxies and capital market play, they should continue, should give huge support to the markets. So as the markets, and if they do correct for any global reasons, our take, as I've always said, is if they bottom out at lower levels, it will give opportunities, as I said, for two reasons. One, for the next bull market to come, you'll get new leaders, new stocks, and new sectors which you should be on the lookout. And two, you cannot be a pessimist as far as India is concerned. As our founder has said, you cannot be a successful pessimist. India is going to be one of the markets that will keep on outperforming over the next years.
You know, Mayuresh, just now NSE has come out with this notification that they have 20 crore client accounts now. So come what may in the market.
Hooray for CDSL. You know, Mayuresh, it's quite funny that elections are being held in the US. There has been a minority government now in place in Japan, and it is our market that is getting the shivers. So, you know, अब क्या कर सकते हैं? This connected world where you get news every second, you try and link it to your own markets, whether they make sense or not. But you know, such is life. Nevertheless, a lot of interesting things are happening, and if you look at the entire high beta space that William O'Neill software explains very well, lots of traction is coming back. Look at railway stocks today. Those 7-8% gains are back on the screen. Small banks are doing well. The smaller PSU banks are doing even better. So, you know, the mojo is back in the market, and that's what festivities are all about.
Absolutely. Absolutely. And sir, I think a lot of these spaces which have got beaten down should be on your radar as well. So within defense, as I said, shipbuilders got beaten down significantly. So if they correct further, they'll make a good lower base at lower levels. They'll consolidate. Would be one space on your radar. PSU banks, I've been time and again mentioning, I think they have, and they would continue remaining so. Be selective, but I think, these are pockets where valuations and price action comfort remains.
You know, with Mayuresh, the good part with you is that, you know, how time lapses, we just don't get any idea at all, and it's always a wonderful discussion, no matter how long it continues. But again, thank you for your time, and best wishes to you, everybody at home, all at William O'Neill Securities, to have a great Diwali, and of course, a better 3 months than what we've seen in the past 3 months, and a great Samvat of 2081. Thank you for your time.
Thank you so much.
Thank you, Sakshi. Shubh Deepavali, and always remain optimistic, always remain positive. India will
Thank you so much.
Okay, that was, ladies and gentlemen, Mayuresh Joshi, Director of Research at William O'Neill Securities. He's set up a portfolio of 6 stocks for the Samvat that is going to start tomorrow. Let me just take the names again. From the capital market space, you have back-end services provider CDSL, the second largest AMC by assets under management, which is HDFC AMC. From the power sector, he's chosen a transmission and distribution company called KEC International, followed by a power producer, Torrent Power. Then comes 2 separate stocks. One is a specialty chemicals company called Privy, which is in the business of making perfumes that go into cosmetics, and finally a company called Salzer Electronics that makes rotary products for switch gears for the back-end capital goods sector. So these are the 6 stocks that have been discussed today. An equal portfolio. We will put these 6 stocks along with buy zones on our respective Twitter account, and then you can have a look at them at your convenience. Thank you for your time. Stay tuned with Business Today Television. There's a lot happening on the other side of this break.
Thank you. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the earnings special edition on Business Today. We're going to be talking about LIC Housing Finance on the Q2 numbers that have come in. The company's reported a profit after tax of 1328 crore rupees. That's a jump of 12% year on year. The total disbursements have come in at 16,476 crores in this quarter. That's also jumped by about 12%. We've also seen the total outstanding loan portfolio at about 2,94,588 crore rupees. That's another jump of 6% odd. although we have seen the net interest margin and the net interest income slip a tad bit when we talk about year-on-year performance. Now, let's welcome the top guest on the show, management of the company, to detail for us what has worked for them in this quarter and what is the outlook looking like. With us on this show is Mr. Tribhuvan Adhikari. He's the MD and the CEO of LIC Housing Finance. Warm welcome to you, sir, and thank you so much for taking the time out for this special discussion.
Thank you, Sakshi. Thank you for having me.
Thank you so much for joining in, sir. Let me, at the beginning,